Hey everyone, welcome back to Corporate Decoder, the place where we decode those super dry corporate filings to find the juicy business secrets, and this one from Data Storage Corporation might surprise you with what it is not saying. Today we're diving into a report that looks like it is all about business as usual, but it is actually hiding an event that could shake things up for shareholders. We're going to cut through the red tape and get to the heart of what this filing means for Data Storage Corporation. And before we get into the nitty-gritty, if you love getting these corporate breakdowns without the boring jargon, make sure you are subscribed. Also, we've got a fantastic community over on Discord, so join us by clicking the link in the description below. Alright, let's talk about what we've got here. This is what is called a Form 8K, which is basically a company's way of telling the US Securities and Exchange Commission, or SEC, that something important has happened, and they need to report it right away. Think of it like a company's immediate press release to the public market. And this particular report is a current report, meaning it is about a very recent event. The report is filed on the 23rd of December 2025, and it is telling us about something that happened on that very same day. The company we're looking at is Data Storage Corporation. They're incorporated in Nevada, and their main business revolves around data storage, which in today's world is pretty crucial. Their stock trades on the Nasdaq Capital Market under the ticker symbol DTST for their common stock and DTSW for their warrants, which are like options to buy stock. Now, a lot of this filing is standard procedure, filling out forms, confirming registrations, and listing what securities they have registered. They have common stock, which is the basic ownership in the company, and warrants. On paper, this stock has a par value of just 1,000% per S-hair, which is super low and not really indicative of its market price. The real meat of this report, the other event, is tucked away in item 8.01. What happened on the 23rd of December 2025, according to this filing. The company issued a press release. Now, you might be thinking, so what? Companies issue press releases all the time. But here is where it gets interesting. This press release attached as Exhibit 99.1 isn't just a casual announcement, it is related to a tender offer. This is a crucial legal disclaimer. They're saying this press release itself isn't the official offer to buy or sell. The real action, the formal offer to buy shares, will come in separate documents. This is common practice to make sure they follow all the rules when they want to buy back their own stock or make an offer to existing shareholders. This is where the shareholders get involved. The company is essentially planning to buy back some of its own common stock. They're telling their stockholders to look out for these official documents, the offer to purchase, which will contain all the details on how this tender offer or buyback program will work. This is standard legal advice. They're emphasizing that shareholders need to pay close attention to these future documents. Why? Because a tender offer can significantly impact the stock price and a shareholder's investment. It outlines the price they're willing to pay for the shares, the number of shares they intend to buy, and the time frame for the offer. They're also pointing people to where they can find this information. The SEC's website, www.sec.gov, is a treasure trove of public company filings, and they're also saying you can get these documents directly from the company itself, usually for free. This is all about transparency. Finally, the report just lists what is included with this filing. The main thing here is Exhibit 99.1, which is the press release we've been talking about. They also include Exhibit 104, which is an interactive data file for the cover page. Then we have the signatures. This is where the company's authorized representatives sign off, confirming that the information in the report is accurate to the best of their knowledge. In this case, it is signed by Charles M. Peluso, the Chief Executive Officer, on the 23rd of December 2025. Now, looking at this report, you don't see any financial tables, no profit and loss statements, no balance sheets. This Form 8K isn't about the company's day-to-day financial performance as of this date. It is about a specific strategic move that is being announced, a tender offer. So, what does a tender offer or a share buyback actually mean for a company like Data Storage Corporation and its investors? When a company buys back its own stock, it is usually a signal that management believes the stock is undervalued. They're essentially saying, we think our own shares are a good investment right now. This can have a few positive effects. First, it reduces the number of outstanding shares. If the company's overall earnings stay the same or increase, then earnings per S-hair or EPs will likely go up because you are dividing the same earnings by fewer shares. Higher EPs can make the stock look more attractive to investors and potentially drive up the stock price. Second, it can return capital to shareholders by buying shares. The company is using its cash to give money back to those who are selling their shares. This can be an alternative to or a supplement to paying dividends. However, there are also risks. If the company uses too much cash to buy back shares, it might not have enough money left for important investments, research and development, or to weather unexpected downturns. If the company buys back shares when the stock price is artificially inflated, it is essentially overpaying and destroying shareholder value. In the case of Data Storage Corporation, this report doesn't give us the financial details of the tender offer. We don't know the price they're offering or the number of shares they want to buy. That information would be in the offer to purchase documents they mentioned. What this filing does tell us is that the company is actively managing its capital structure and is signaling a belief in its own stock's value. It is a proactive step that could be aimed at increasing shareholder value. When we look at this filing, the absence of immediate financial data in the 8K is notable. This isn't a quarterly earnings report. Its primary purpose is to disclose a significant corporate action, the initiation of a tender offer. The real story here is the strategic decision to buy back stock. Companies undertake tender offers for various reasons. Sometimes it is to consolidate ownership, to prevent a hostile takeover, or as we've discussed, to return value to shareholders. Given the timing and the nature of the announcement, it is likely Data Storage Corporation believes its shares are trading below their intrinsic value. Think about it this way: if you owned a house and you thought it was worth more than what people were offering, you might buy it back yourself if you had the cash, hoping to benefit from its true value later. That is a simplified version of what a tender offer can represent. The critical takeaway for investors is to look for those follow-up documents. The offer to purchase will hold the key details: the price per S-hair, the expiration date of the offer, and any conditions. This will tell us the scale of the buyback and the potential immediate impact on the stock price. Without those specifics, this 8K is more of an announcement of intent rather than a full picture. It piques interest but requires further investigation into the subsequent filings. So, what is my take on this? Data Storage Corporation is making a move that, on the surface, appears to be a vote of confidence in its own future. They're using their resources to potentially boost shareholder value by reducing the share count and signaling that they believe the stock is a good investment. The strength here is that management is being proactive in managing its capital and signaling a potentially undervalued stock. The weakness, or rather the uncertainty, lies in the details of the offer itself. We need to see the price and the number of shares to truly assess the impact. Key risks include whether they are overpaying for the shares or if this buyback drains resources needed for growth. My conclusion is that this is a positive signal, but it is just the first step. Investors should be eagerly awaiting the detailed offer to purchase. This report sets the stage for a potential shift in the company's capital structure and, hopefully, an increase in shareholder value. Alright, that is our breakdown of Data Storage Corporation's latest filing. What is your take on this tender offer announcement, and what do you think it signals for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more corporate deep dives. Don't forget to check out the Discord link in the description. Thanks for watching, and we'll see you next time.